7. Insurance recommendation, contract, and service needs. Once the fact-finding process is complete and the client profile is accurate and comprehensive, the next important steps in the insurance process include black small square insurance recommendation, black small square an insurance application, black small square underwriting by insurer, black small square insurance contract, black small square policy claims, black small square client service. 7.1 Insurance recommendation. The first step is the development and presentation of a solution to the client's needs, the insurance recommendation. The life insurance agent has a duty of care to develop a recommendation, or series of recommendations that are suitable to the client's needs and to present the recommendations in such a way that the client can understand the nature of his problems and the solutions offered and make an informed decision. Many considerations go into preparing an accident and sickness insurance recommendation, black small square basis for the recommendation, black small square recommendations to manage premiums, black small square head office modifications for non-standard risks, black small square providing quotes, black small square documenting the recommendation, black small square presenting complementary policies, black small square revising the recommendation. 7.1.1 Basis for the recommendation. The fundamentals of any insurance recommendation start with the client profile, which was discussed in the previous chapter and outlines the client's goals, needs and wants and his available resources to meet his objectives. With the client's overall ANS needs clearly established, the agent then needs to compare those needs against the client's current resources, income, assets, and existing insurance, to determine where shortfalls and gaps may exist. Assuming that there are shortfalls/gaps, the agent should first consider whether the client's existing policies could be modified, through changes in coverage or the addition of riders, to create a more comprehensive insurance portfolio to meet these needs. And then consideration should be given to recommending new product acquisitions, to complement existing coverage and to complete the portfolio. 7.1.2 Recommendations to manage premiums. Accident and sickness, ANS, insurance is a complex product, in all its variations, and tends to carry a relatively higher premium compared with other types of insurance. This is due to the greater likelihood of occurrence of the covered conditions, as evidenced in insurers' claims ratios. The result is that the premium commitment required of the client may be higher than anticipated, providing a roadblock to a successful completion of the recommendation process that would ensure any coverage gaps are closed. Assuming that cost remains an issue, the agent may need to consider modifying the product recommendation to manage the premium. Many ANS products have variations that can be selected to suit a proposed insured's needs and budget. 7.1.2.1 Extending waiting period, shortening benefit period, reduced benefits, and nature of the contract. Waiting periods, benefit periods, the amount of benefits and the nature of the contract can all be varied to suit a proposed insured's needs and budget. The longer the waiting period and shorter the benefit period, the lower the premium will be. A lower premium would also result from reducing the amount of the benefits. Waiting period. One of the simplest and most effective means of reducing premiums is to extend the waiting period, the length of time between the commencement of a qualifying disability, critical illness, etc., and the commencement of the payment of benefits. If, for example, the client had selected a 60-day waiting period on his disability policy, extending that to 90 days, assuming that the client has the resources to survive financially for 90 days without an earned income source, could substantially reduce his policy premiums. Benefit period. Similarly, shortening the benefit period under a disability or a long-term care plan would reduce the amount of benefit that the insurer would have to pay out and reduces premiums as a consequence. Again, care would have to be taken to ensure that the shorter benefit period would meet the client's needs, considering the uncertainty surrounding the duration of a disability or a need for care. Benefits. Lastly, the actual amount of benefits provided by the policy could be reduced. This is, however, the more radical solution to policy cost since, if the agent has done his job properly, the benefit applied for is the amount that the client needs. Reducing benefits should likely be a last resort solution. For any and all of the above suggestions to modify premium costs, care must always be taken to ensure that the client gets the best value for the premium dollars spent. Before considering any reduction in benefits, or benefit periods, every effort should be made to impress upon the client the need for the recommended coverage, and the agent should work with the client to find the needed premium dollars, wherever practical. Nature of the contract. Usually, the best contract must be recommended to a client. However, where the premium is too high or payments cease, curtailing the client's coverage, it is appropriate to reconsider the nature of the proposed contract. For example, if the initial recommendation is for a non-cancelable contract, the advisor and the client might consider switching over to a guaranteed renewable contract that is more affordable in terms of premiums but is nonetheless an excellent contract. 7.1.3 Head Office Modifications for Non-Standard Risks. Insurance companies set premiums to cover, among other items, administrative costs, including the anticipated level of claims. To keep premiums at an affordable level for all insureds, insurance companies consider the level of risk of claim associated with each proposed insured prior to accepting the risk to insure. The underwriting process will place a prospective life to be insured in one of three categories. Black small square standard insurable risk. Black small square non-standard insurable risk. Black small square uninsurable risk, a decline. In the case of non-standard risks, the company would normally still like to accept the risk, provided they can limit the extent of the risk to acceptable levels. Typically, the insurer will modify the policy applied for in one or more of four ways. Black small square imposing exclusions. Black small square imposing limitations. Black small square rating the premium. Black small square imposing a deductible on claims. The client will not know the specifics of changes to the policy as applied for until time of policy delivery by the agent, but the agent may have an idea that the insurance company has some concerns and help prepare the client if, for example, he is required to take additional medical tests. Underwriters/companies will usually notify the agent of placement and/or any modifications and why. This should provide an adequate amount of time for the agent to prepare for the delivery interview. 7.1.3.1 Suggesting exclusions, limitations, and ratings. Exclusions, activities or conditions that are not covered under the contract, and limitations, restrictions on the amount of benefits, benefit period, etc., are both elements that the insurance company might integrate into the contract being offered to the client to limit the insurer's otherwise excess risk exposure with a non-standard life. A rating is simply applying a premium to the contract that is higher than would be warranted if the applicant was rated standard. The higher premium allows the insurer to build up a higher reserve to help offset the higher risk of having to pay benefits. 7.1.3.2 Suggesting deductibles. An alternative, or complement, to modifying the benefits available under the plan is to require the insured to share in the cost of the covered treatments or benefits otherwise payable by imposing a deductible, an amount of the claim that must be paid by the insured before any benefits are forthcoming from the insurance company. Deductibles would be most common in extended health plans, plans which would normally require the insurer to pay, or reimburse the insured for, covered goods or services. Instead of being covered for the first dollar of claims, the insured is required to cover a dollar amount of the covered items himself, usually with a new deductible being applied each coverage year. In this way, the insurance company's exposure to payouts is somewhat reduced. Example: Elvira's Group Extended Health Insurance Plan offers coverage of up to $2,500 a year for preventative and restorative dental services, after allowing for a $200 annual deductible per calendar year. Elvira's first claim this year was $300 for x-rays, cleaning and one filling. She had to pay the first $200 herself, under the deductible, and was reimbursed the additional $100. For any subsequent dental claims during the same calendar year, no deductible would apply. 7.1.4 Providing quotes. There are two schools of thought about presenting multiple quotes or not, alternative product recommendations or policies, at the recommendation interview. Present only one product solution. The agent has already done all the work and is presenting the best solution. The client only has one decision to make, to accept the recommendation or not. However, the agent will research the market and make product comparisons prior to the presentation interview and should maintain a record of his research and the reason for his final recommendation. Black small square present two suitable, but different, options. The client is engaged in the decision-making process based on the agent's preliminary research. Which route to go is a matter of personal choice, but the agent who presents complementary choices should prepare a clear comparison, perhaps in chart form, that highlights the main points of each policy and their differences and similarities. Trying to compare more than a few basic points is likely to confuse the client and lead to analysis paralysis, where the client has too many choices to make to be able to make a decision. In making comparisons, the agent should focus on where the policies may be similar, but not necessarily identical, and where they differ in any significant degree. On the issue of similarities, it would be important to highlight, for example, that both of two disability policies being recommended offer indexing of benefits tied to the Consumer Price Index, CPI, starting at the first day of disability. On the other hand, two critical illness policies that are both suitable for the client's needs might have very different definitions of a qualifying stroke, both as to the level of permanent neurological impairment required for a successful claim and the number of days that must pass before a declaration of impairment can be made. Once the applicant has a clear understanding of the elements of each contract, the agent can help him make an informed decision between the policies being considered. 7.1.5 Documenting the recommendation. In the client's and the agent's best interests, it is vital that the particulars of any recommendations made, both written and verbal, be recorded in the agent's client file. Both the rationale for the recommendation and the client's expectations should be documented in order to confirm that the client's needs were at the forefront of the process. 7.1.5.1 Rationale for recommendation. The details of the recommendation itself are obviously important, but communicating and documenting the rationale behind the recommendation might be equally important. Of course, it is preferable that this rationale should be provided in writing to the client at the culmination of the recommendation process, but there may be much background information that the client would not normally be privy to, comparative product quotes and other research, for example. This material should all be retained in the client file for future reference. Agent Horst had to defend himself against a client complaint after another agent had reviewed the product that Horst had recommended, suggesting that Horst had not done due diligence in his research and therefore had not made the best recommendation for his client. In fact, Horst had compared 5 similar products that could meet his client's needs and recommended the one that he felt was the best fit. Horst had wisely kept copies of his product research and a grid that he created to compare the products from a variety of perspectives. These documents proved invaluable in defending the fact that he did his due diligence and made a valid recommendation. 7.1.5.2 Client expectations. The complement to providing the rationale for the recommendation is to address, manage, and document client expectations. During the fact-finding interview and follow-up, dealing with goals, objectives, and needs, the client may express his expectations regarding black small square the type and amount of insurance he feels that he needs. Black small square the type of insurance he expects he could qualify for, example, non-smoker rates. Black small square whether he is in good health, i.e., a standard risk. Black small square the cost, premium, of the product, etc. Meeting or managing those expectations could be just as important to the recommendation process as selecting the most effective product for the client's needs. The details of those expectations should be addressed throughout the sales and service process. The client file should contain black small square a record of the expectations disclosed in the fact-finding interview. Black small square a record of the agent having taken those expectations into consideration in his recommendations and where the product recommended meets those expectations or not, and why. As well, at the policy delivery interview, when the agent reviews the new contract with the client, the issue of client expectations should be addressed again. If there are any serious divergences, it would be good for the agent to have prepared a waiver for the client to sign, pointing out any differences between the expectations and the reality, and have the client sign it. 7.1.6 Presenting complementary policies. Sometimes a single policy is not the answer to the client's needs and a combination of policies must then be recommended to provide a comprehensive solution. Even though the client may not be ready to purchase the complementary coverage just yet, its usefulness should be discussed early on so that the client may be aware that coverage gaps will remain until all his needs are fully addressed. Example: Elijah owns a computer software consulting firm with 3 employees, 2 part-time employees and 1 full-time employee named Malik. Malik's services are critical to the success of the business. If this key employee was to die or become disabled for a lengthy period of time, business revenues would suffer significantly, perhaps to the point where the business would have to be wound up. At the same time, Malik has a wife and 2 children who are wholly reliant on him for their financial support. Elijah feels that the business could survive for at least 6 months without Malik's contribution, but his family would be in serious financial straits after only 60 days. The business would need replacement cash flow of $10,000 a month for up to 2 years, whereas the family would need $3,000 a month for at least 5 years, if the disability lasted that long. It would appear that one disability contract would not meet the needs of both the business and the family, so Elijah's agent recommended that the company take out 2 policies, a key person disability contract for $10,000 a month with a 180-day waiting period, payable to Elijah's company, and a disability policy for $3,000 a month with a 60-day waiting period, payable to Malik. 7.1.7 Revising the recommendation. For practical purposes, the agent's recommendation cannot be a take it or leave it proposition. If there are aspects of the recommendation that do not suit the prospect's needs or expectations, the agent has an obligation, both moral and legal, to serve the client by providing as suitable a solution to the client's needs as possible under the circumstances. If the recommended product solution is not acceptable, too expensive, doesn't contain all the features desired, etc., it is the obligation of the agent to restructure the recommendation to make it acceptable to the client, while still ensuring that it meets the client's coverage needs as closely as possible. This may be accomplished in the recommendation interview, or the agent may have to go back to the drawing board to develop a new approach to be presented at a subsequent interview. 7.2 Application for insurance. Whether for life insurance or accident and sickness insurance, in the case of individual coverage, as contrasted with group coverage, the insurance application is the cornerstone of the issue process. Subsequent evaluations and investigations of the needs and health of the individual to be covered will be based, initially at least, on the information provided in the application. The application provides for information on the health and financial status of the applicant and/or life to be insured, in addition to the type of insurance being applied for and the reason for which the insurance proceeds would be required. 7.2.1 Attention to detail required. Because the entire insurance underwriting and issue process begins, and sometimes ends, with the application, it is critical that the agent involved in taking the application gathers information that is as complete and as accurate as possible. It is the role of the agent to ask the applicant, and/or the life to be insured, if different from the applicant, every applicable question on the application form and to record the answers fully and accurately. Within limits, the agent is expected to be the expert on what information is required for the underwriting department. The applicant, and the life to be insured, are assumed to be lay persons, unschooled in the world of insurance. From a practical standpoint, and legally, the applicant and life to be insured are, within reason, entitled to rely upon the expertise of the agent for interpretation of the questions being asked on the application and an explanation of the nature of the answers expected. If the head office underwriters are to be expected to do their jobs properly, the answers provided to them must be precise and unambiguous. Inaccurate or incomplete information on the application could, at the least, result in a delay of the underwriting process. At the worst, incomplete or inaccurate information on the application could result either in coverage being declined where circumstances actually warranted it being issued, or in coverage being offered where there should have been more investigation done before a policy was issued. This second scenario could set the stage for a possible lawsuit down the road, should a claim be denied on account of misrepresentation. Particular attention must be paid to the following aspects of the application. Product type and coverage details. The application should be completed to identify the type of insurance being applied for, disability or critical illness, for example, and the insurer's name for the type of policy. Coverage includes type and amount of benefits provided. It is up to the agent and the applicant to work out together the most appropriate amount of coverage to be applied for in the applicant's circumstances. Owner, life insured, and beneficiary. It is important to determine the owner, the life insured, and the beneficiary of the contract. In many cases, these will all be the applicant, but under certain circumstances, such as business insurance, the owner, life insured, and beneficiary may differ. In all situations, care must be taken to ensure that the correct parties are named under the policy. Premium. The agent will normally have access to software to determine the premium rate for a standard life insured, for the type of plan being applied for in the profile of the applicant. The actual premium applicable to the issued policy may differ from that quoted on the application, depending on whether the life to be insured is rated standard and any restrictions or exclusions applied in the contract. The quoted rate will, however, give the applicant a reasonable expectation of the cost of coverage. Riders, in addition to the base coverage and benefits provided by a given type of insurance contract, optional benefits, riders, may be added to the policy at the discretion of the applicant, subject to financial and medical underwriting. Riders are subject to separate premium pricing and underwriting requirements. 7.2.1.1 Naming of beneficiary. As stated previously, in the case of most personally owned accident and sickness policies, the contract owner, the life insured under the contract, and the beneficiary will generally be the same person. Most people will indeed wish to insure themselves against loss of income due to disability, the impact of a critical illness, or the costs of long-term care. Example. Concerned about not burdening his children financially, Audrey is applying for a long-term care policy on his own life to cover nursing home fees and other medical costs should he need care in his elder years. Audrey will be the owner, the life insured, and the beneficiary of the policy. In business cases, however, care must be taken to ensure that the correct beneficiary is named under the policy, for both practical and tax reasons. Example. Hanif runs a private incorporated business with 3 employees. He has struck different compensation arrangements with each employee and has taken out individual disability insurance policies on 2 of them, Alfred and Blanche, for different purposes. The policy on Alfred is a key person plan, designed to compensate the business for the loss of his services should he become disabled for a period of time. Hanif's business should be both the owner and the beneficiary of that policy. Neither the payment of premiums by the employer nor the payment of benefits, if any, to the employer would have a tax impact on the employee who is the life insured under the policy. A second policy, on the life of Blanche, is intended to replace her personal income should she become disabled, thereby relieving the business of any obligation to continue Blanche's salary even though she is not productive and contributing to business revenues. The business should be the owner of the policy. If Blanche is named as beneficiary of the policy, she should report the premiums that the business pays on the policy as a taxable employment benefit. Otherwise, the business could be named as beneficiary and use the policy benefits to replace the salary otherwise payable to a disabled Blanche. But in that case, the entire benefit paid to Blanche would be taxable, not merely the premiums paid on the policy. Either outcome is acceptable, but Hanif and Blanche would need to know the tax consequences arising from the structure chosen. 7.2.2 Agent's contribution to application. In completing the application form, the agent need not be a mere recorder of information provided by the applicant. Aside from prompting the applicant to provide information to fill in the blanks on the application, or to answer the specific questions presented there, the agent can be proactive, soliciting information that he knows the head office underwriting department may require, even if it is not specifically requested on the application. Additionally, the agent may record impressions gleaned from the client interview. The agent is certainly the first, and perhaps the only, representative of the insurance company that will meet with the applicant face-to-face, so the agent's thoughts, impressions, and concerns may be critical to the underwriting process. The agent intervenes in the following aspects of the application. Black small square agent's comments. Black small square medical questions. Black small square inspection report. Black small square hazardous sports and occupations questionnaires. In certain cases, additional questionnaires or interview questions could be required. 7.2.2.1 Agent's comments. Aside from all the specific questions on the application form, dealing with such subjects as income and medical history, there is an open section called the Agent's Comments or Agent's Report where the agent has the option of reporting information or impressions that he feels would be important for the underwriting department to know. These additional comments might be beneficial or detrimental to the applicant's case, depending on the circumstances. Generally, however, the comments section is used to expand upon answers that don't fit in the box of specific questions asked by the application form. For example, black small square the application might ask for the applicant's level of income, but the agent knows, through the interview process, that the applicant plans to leave his current employer in the next few months, striking out on his own, and likely suffering a significantly reduced income for the next couple of years. This information should be communicated to the underwriting department via the agent's comments section of the application. Black small square the client, conversely, may be earning $75,000 a year today, but his employment contract calls for a guaranteed increase to $100,000 starting in 6 months' time. If the applicant requests coverage based on the $100,000 figure, the request will likely be modified or declined unless the agent advises the underwriting department of the pending raise. Black small square. During the course of the application, the agent might observe something that an insurance company should explore further. For instance, if the client's clothes smell like cigarette smoke but the client claims not to be a smoker, an agent should draw the insurer's attention to it. Continuous exposure to second-hand smoke may have a lasting negative effect on a proposed insured's health, which could also impact premiums. The agent's comment section then becomes a handy catch-all to ensure that the insurance company is in possession of all of the information that the agent is privy to, and this is a good thing because, at law, the company is deemed to be in possession of all such information, whether they are in fact or not. 7.2.2.2 Medical questions. A significant part of the agent's role in the application process is assisting the applicant with the completion of the non-medical form, a questionnaire that requires the applicant to respond to a series of questions about his and his family's health history, either in lieu of or as a precursor to undergoing a medical examination. It is the role of the agent to interpret the answers given by the applicant, to get the applicant to expand upon his answers where necessary and to faithfully record the applicant's answers for the benefit of the underwriting department. Example. A question on the non-medical form on an application asks, when was the last time you visited a doctor and what was the reason for the visit? The applicant, who was also to be the life insured under the policy, answered, last July, for a checkup. The agent recorded the applicant's answer and moved on to the next question. However, this left a number of unanswered questions in the mind of the head office underwriter. Black small square. Was this an annual or semi-annual scheduled checkup, or was there a specific problem that triggered the visit to the doctor? Black small square. If the latter, what was the specific problem? Black small square. What were the symptoms, if any? Black small square. What did the doctor conclude? Black small square. Were you subsequently sent for tests? If so, which tests? What feedback did you or your doctor receive? Black small square. Was any medical procedure required? Black small square. Were any drugs or therapies prescribed? Black small square. What was the result of the treatment, if any? An answer simply recording the date of the applicant's last doctor visit might have satisfied the needs of the question, in its simplest form, but would not have satisfied the underwriters. 7.2.2.3 Inspection Report. Upon reviewing an application for insurance, the head office underwriting department may seek an inspection report from a third party. The agent has no role to play in the ordering of such reports or any additional reports or medical tests. Such reports are just one of the numerous investigative tools that the applicant authorizes when he signs the application form. The third party, a specialized investigative agency, may seek input from the applicant's employer, neighbor, etc., with regard to the applicant's lifestyle, spending habits, hobbies, any dangerous sports or recreation activities, drinking habits, etc., any activities that might impact on the degree to which the applicant might be a claims risk. 7.2.2.4 Hazardous Sports and Occupations Questionnaires. If the applicant indicates on the application that he engages in hazardous sports or other recreational activities, flying a private plane, skydiving, etc., or that his job involves unusual hazards, as a firefighter, perhaps, he will likely be asked by the insurer to fill out a special questionnaire at time of application, such as a drug questionnaire or one dealing with alcohol consumption. The form will ask for details of the activity itself in addition to seeking such information as to how often the applicant engages in the activity or intends to engage in it in the future. If the activity is sufficiently risky, an exclusion rider may be added to the policy denying benefits from any claim arising from the hazardous activity. 7.2.3 Necessary Documents and Procedures. Almost all types of insurance require the applicant to provide documentation in support of health, income, or insurance needs and perhaps to undergo specific medical procedures. An applicant for disability, critical illness, and long-term care insurance also has to provide specific information regarding income and insurability, health. All types of business insurance have at least parallel requirements to their personal underwriting counterparts. For example, personal disability and key person coverage would both require health information on the life to be insured and financial information to assess the impact of disability. Extended health insurance tends to rely primarily on the health questionnaire. 7.2.3.1 Medical Exam. Every insurance company has its own set of rules as to whether, or when, an applicant for insurance is required to undergo medical tests or a medical examination as part of the underwriting process. The medical evidence may be automatically required in all cases if the life to be insured is over a certain age or the face amount of insurance, monthly benefit, etc., exceeds a certain limit. An exam may also be required in instances where the applicant's medical history indicates a need for the insurance company's underwriters to have more information. Example: in completing the non-med questionnaire on an application for long-term care insurance, Jorge disclosed the fact that he had a minor heart attack 4 years ago. In order to determine the extent of the damage to his heart muscle, the insurance company asked for an attending physician's report and a doctor's medical with a stress test. 7.2.3.2 Confirmation of income. Particularly in the case of an application for disability income replacement insurance, proof of the applicant's income and identification of the sources of income is essential to the underwriting process. The amount of disability coverage that an insurance company will issue is, in part at least, based on the amount of pre-disability income that the applicant has. Typically, coverage cannot exceed 60 to 70% of pre-disability income, but some policies extend this range as high as 85%. But, of course, the insurance company will not simply take the applicant's word regarding his income sources. Independent verification is required. In addition to answering income-related questions on the application, the applicant may be required to provide copies of his most recent tax year's T4 and T5 slips and/or a copy of at least his most recent T1 income tax return and the corresponding notice of assessment from the Canada Revenue Agency, CRA. In fact, companies may require more than 1 year's evidence in order to establish consistency of income and income trends. In the case of an application of coverage in a business situation, the insurance company would normally request financial statements, income and expenses and a balance sheet for, at least, the past 3 years. 7.2.3.3 Replacing existing coverage. If the accident and sickness insurance being applied for is replacing currently existing coverage, in whole or in part, prescribed procedures have to be followed in order to provide sufficient disclosure. For the client to understand whether or not the change recommended is in his best interest. The agent will normally be required to complete a form comparing the old and the new policies from a number of perspectives: black small square premium, black small square covered conditions, black small square excluded causes of disability or critical illness, black small square riders and other benefits, black small square expiration of coverage, black small square waiting and benefit periods, particularly in the case of disability insurance, and black small square definitions of covered conditions. Failure to act in the best interests of the client when recommending a replacement could place the client at risk of coverage gaps. 7.3 Underwriting by insurer. Insurance companies assess applicant risk in 2 different ways: financial underwriting, to verify the applicant's level of income, so as to be able to assess the maximum level of coverage to which the applicant could be entitled and to determine his ability to pay for the coverage over the long term. Medical underwriting, to determine whether the applicant is an acceptable claims risk from a health perspective. However, there are also distinct pricing factors that affect premiums, no matter the conclusions arrived at during the underwriting process. These are addressed in the following section. 7.3.1 Factors affecting premiums in pricing disability and other ANS products. Insurance companies rely on several different factors, but the extent to which they can control them varies. The following considerations have an impact on how insurers set premiums: administrative costs and expenses, ongoing costs of staffing, marketing and issuing contracts and maintaining records. Increased costs and expenses lead to higher premiums. Investment returns, returns generated by investing capital reserves. Increased returns lead to lower premiums. Lapse rates, number of active policies that are canceled or terminated due to non-payment. Lapse, higher lapse rates lead to potentially fewer claims and lower premiums. Morbidity rates, rate of illness or injury within the population. Increased risk of illness or injury lead to higher premiums. Black small square ratings and exclusions. Ratings are a higher premium set for non-standard risks. Exclusions limit or eliminate benefits for specific conditions or causes. Both ratings and exclusions lead to lower premiums for standards risks. 7.3.1.1 Morbidity rates. Morbidity is the instance of disability, injury or illness in the population at large. Morbidity tables predict not who, but how many persons of a given age and gender in a given population will likely become disabled, or critically injured, or in need of nursing home care or health care, etc. Morbidity tables work with large numbers, millions of people, but are rather less reliable in predicting disability among a smaller population, like the lives insured with a given insurance company. In part, insurance companies base their insurance pricing, premiums, on the estimated number of claims they are likely to incur in a given time period. As noted, morbidity tables are used by actuaries to estimate future claims as accurately as possible. Actual numbers of claimants may vary, greater or less than estimated, with the potential variance becoming more severe if the mix of lives insured by the insurance company varies significantly from the mix of lives in the population as a whole. Moreover, the tables only show the number of past claims, their causes, and their duration, not the dollar amount of exposure per claim. That figure is a function of the level of insurance provided under each policy. Point 42. The degree to which a given company's claims exceed or fall short of the assumptions built into premium pricing will impact profits and, therefore, future premium pricing. 7.3.1.2 Ratings and exclusions. The insurance company might use premium ratings, a premium schedule higher than that for standard risks, and exclusions, denying claims arising from excluded causes or conditions, to mitigate their exposure to risk, and therefore to excessive claims. Generally, insurers prefer to avoid completely denying coverage to non-standard applicants. The use of ratings and exclusions allows the insurer to offer coverage to those applicants who do not fit within the standard range while limiting the insurer's exposure to undue risk and thereby reducing its costs. 7.3.2 Financial underwriting. As noted earlier, the amount of disability income replacement insurance issued on a given applicant is calculated according to the applicant's income. Coverage that insurers will issue is restricted to a percentage of pre-disability income from all sources and is coordinated with benefits available from all other sources, group and government plans, for example. This is to ensure that the policyholder/beneficiary would not be better off financially while on claim than while healthy and working. Such overinsurance could, in some cases, lead to anti-selection, the tendency for an insured to file a false claim or needlessly prolong, malinger, a valid claim simply because policy benefits might leave them better off financially than when they were working full-time. Additionally, verification of an applicant's income and expenses, cash flow, could provide an indication as to whether he is likely to be able to afford the policy premiums over the long term. Issuing an insurance policy is an expensive proposition, and it often takes several years from issue date before the insurance company will be in a profit position from a given sale. The insurer will want the reassurance that the applicant would be able to maintain the policy at least until that crossover date. Aside from the issue of the likely duration of a newly issued policy, an applicant wishing to acquire coverage that he obviously cannot afford to maintain should send up red flags to the insurer. Perhaps the applicant wants the coverage in anticipation of filing a claim in the near term. This affordability issue is a concern for critical illness, long-term care, and health insurance policies, as well as for disability insurance, so financial underwriting is a factor here as well, although the amount of coverage is not directly tied to the applicant's income. 7.3.3 Medical underwriting. In addition to seeking a medical evaluation of a life to be insured through a medical examination performed by a doctor or a paramedical professional, insurance companies also regularly, but not automatically, rely on reports solicited from the applicant's personal physician and input from the Medical Insurance Bureau, MIB, in order to assess whether to accept the risk of insuring a given applicant. 7.3.3.1 Attending Physician Statement, APS. The insurer may seek input from the personal physician of the applicant or from other physicians who may have attended him for specific ailments in the past. The request for an APS may be automatic, under the insurer's procedures based on the age of the applicant or the amount of insurance being applied for, or the past medical history of the applicant, or his family, revealed in the completed non-medical questionnaire on the application, may trigger a request for an APS. A request for an APS is made directly between head office underwriting and the physician in question, and the cost of the APS is borne by the insurer. In addition to the APS, the insurer may request additional information or tests, such as a medical exam by a paramedical technician, PERMD, or physician, blood or urine tests, or an electrocardiogram. Point 43. 7.3.3.2 Medical Information Bureau, MIB. The Medical Information Bureau, MIB, or MIB Group Incorporated is an organization serving the life and health insurance industry by compiling historical data on lives insured and those applying for insurance. The insurer reports coded information to the MIB when an individual applies for insurance and also seeks such coded information currently on file with the MIB. The information shared with the MIB is not so specific that it could be used to underwrite an applicant, but provides general markers that would indicate a possible health problem and could trigger the insurer to seek additional input from physicians, etc. In addition to health data, the MIB may also collect information about coverage currently in force or currently being applied for, and instances where coverage was declined on an applicant. By sharing such information among insurance companies, via the MIB, the insurance companies are able to protect themselves against those applicants seeking to overinsure themselves by purchasing coverage from several different companies and failing to declare the existing coverage or other current applications, or seek to obtain coverage to which they are not entitled due to medical conditions not disclosed to the insurer. Without the assistance of the MIB, this latter problem could be particularly prevalent among applicants who are turned down or rated by one company and would otherwise be inclined to turn around and apply to a second insurer without disclosing either the decline/rating or the reason for it. When signing an application for insurance, the applicant will be required to sign a specific authorization entitling the insurance company to solicit information about him and to communicate information with the MIB regarding the application. 7.4 Insurance Contract. The delivery of a newly issued insurance policy completes the contractual process. The completion of an application by the applicant is the first step in the establishment of a contract, the offer to treat. If the insurer issues the contract, either as applied for or with modifications, and delivers the contract to the applicant, usually via the underwriting agent, this becomes the offer by one party, the insurer, requiring acceptance by the other, the applicant, and an exchange of consideration. The policy premium, to complete the legal process. Once the policy, including the application itself, is legally in force, it becomes the basis of all future transactions between the insured and the insurer, determining the rights of the insured and the obligations of the insurer. 7.4.1 Need for prompt delivery. The underwriting process for ANS insurance can be complicated and lengthy, requiring assessment of the application by the head office underwriting department of the insurance company and possibly the ordering of an APS and/or a physical exam and other medical tests. It is not unusual for many weeks, or even months, to go by between the date of application and the date that the policy, if underwritten, is available for delivery to the applicant. It is the norm for the newly issued policy to be sent to the field agent who took the application, with the expectation that the agent will personally deliver the contract to the applicant. Convention allows the new policyholder a 10-day free look at a newly issued contract, 10 days from the date of contract delivery to determine whether to keep the policy. At any point during that period, the policyholder has the right to rescind, the policy to the insurer for cancellation and get a refund of all premiums paid to date. The 10-day period doesn't begin until the policy is physically delivered to the new owner, so the client's option remains open as long as the contract remains undelivered, plus 10 days. It is critical that the delivery be effected as promptly as possible by the agent. As noted in the following section, there is a legal requirement that a contract cannot be put into force if the health or financial status has changed between date of application and date of contract delivery. The longer the delay in delivering the contract, the greater the risk of such a change occurring. Moreover, it is not unheard of for an applicant to have second thoughts about his purchase and decide not to accept the contract, even though the coverage is needed to protect him and/or his family. Prompt delivery, accompanied by a delivery interview reinforcing the rationale for acquiring the coverage, ensures that the recommendation will be effectively put in place to meet the identified need. 7.4.2 Need for agent awareness of change since the signature of the application. The Provincial Insurance Acts have specific requirements that must be met before a contract of life or ANS insurance is legally in force. Generally, the Acts require that black small square the issued contract is delivered to the policyholder. Black small square the initial premium payment has been made by the policyholder. Black small square neither the financial situation of the insured nor the health of the life insured under the contract has changed between the time of application and the time of policy delivery. This last requirement is to ensure that the coverage being delivered is still appropriate. In the case of a disability insurance policy, for example, if the applicant has incurred a reduction in income since time of application, the coverage under the contract may now be excessive and an amount for which the insured would not qualify to claim. If the life insured's health had declined in the interim, the parameters that the insurance company now has to contend with are different from those at time of application, and the offer of coverage has to be reassessed. The agent needs to inquire of the applicant, prior to handing over the issued policy, if the applicant has experienced a negative change in health or income since the date of application. If the answer is yes, the agent should record the particulars of the change, not deliver the contract, but return it along with his notes to the insurance company, for the application to be reviewed and re-underwritten, if necessary. Example: Agent Todd was delivering a newly issued critical illness policy to Lucille. In response to questions asked by Todd in the delivery interview, Lucille acknowledged that she had experienced chest pains, diagnosed as angina, starting about 2 weeks after she had submitted her application for insurance. Rather than deliver the contract to Lucille, Todd took particulars of Lucille's change in health, dates, the diagnosis, name of the doctor involved, etc., and forwarded a copy of his notes, with his report and the contract, to the insurance company for reassessment. 7.4.2.1 Dealing with rated cases. Delivering a policy that has been rated in some fashion, increased premium, exclusions, reduced benefits, etc., can be a sensitive issue, especially if the applicant was not previously aware of the condition that led to the rating. The applicant is likely to have any of several initial responses. Black small square assents that the policy is now too expensive, if the required premium is greater than was quoted at time of application. Black small square disappointment that the policy does not now provide the coverage as applied for if the contract is subject to reduced benefits or exclusions. Black small square surprise that he is suffering from some medical condition of which he was previously unaware. Any and all of these reactions could give cause for the applicant to reject the policy as presented at the delivery interview and thereby decline to put in place coverage that is needed to protect himself and his family. There are a number of steps that the agent can take to encourage the applicant to accept the policy as issued, even though it is different from the initial application. Black small square during the application process, if health or other issues are disclosed that the agent thinks might lead to a rating, he could mention this possibility to the applicant, so that the delivery of a rated policy is not totally unexpected. Black small square in circumstances where the rating might be temporary, or subject to reassessment in the future, this should be explained to the client, to lessen the emotional impact of the rating. Black small square the agent should gently point out that the rationale for purchasing the coverage has not changed and perhaps indirectly imply that the need for coverage is even greater now that the applicant has been found to have additional risk factors. 7.4.3 Providing contract disclosure. The agent should always keep in mind that the client is generally not knowledgeable regarding the intricacies of insurance, and it is the role of the agent to explain the contract at time of delivery, with particular emphasis on those contract clauses which might impact the rights of the insured. Black small square benefits / coverage limits. Black small square riders. Black small square key definitions of covered conditions, particularly in regard to critical illness policies. Black small square exclusions. Particular attention should be paid to the last two items, definitions and exclusions. Absent a clear explanation from the agent, the client may be under the misimpression that all manifestations of a given condition are covered and not be aware that there are specific nuances in the contract regarding the level of disability or type and severity of a given condition that must be met before benefits are payable. And exclusions are typically added to the contract by the insurer's head office after the application was taken. Coverage that the applicant thought he was going to get has been removed from the contract itself. It is critical that the applicant, and his family, particularly in the case of critical illness or long-term care contracts, has a clear understanding and appreciation of what is covered and what is not, in order to minimize conflict between the insured and the insurer at time of claim. 7.4.3.1 Factors that limit coverage, statutory provisions. The agent should also point out to the client that the coverage and benefits provided under any given contract may not be absolute. Where coverage from different contracts overlap, the insured is not entitled to be reimbursed more than once for the same loss. Benefits from one contract may supplement, but cannot duplicate, those from another. Example: Jorge has disability insurance coverage through his group plan at work that will pay him benefits of up to $2,500 a month, 50% of salary, for up to 2 years after a 30-day waiting period. If he wants more comprehensive coverage than that, he could, for example, take out an individual policy that would top up his coverage. by another $500 a month, totaling 60% of salary, for 2 years, and then increase to $3,000 a month for an additional 3 years. This would give him $3,000 a month of coverage for the full 5 years through the two plans combined. He could not, however, collect more than $3,000 a month from the two policies combined. Policies will normally contain a provision outlining priority of payer, in the event that excess coverage is provided through multiple insurers. In any event, there are conventions that restrict disability coverage from all sources to a prescribed maximum of predisability income from all sources, usually 85%, again setting out priority of payers. In critical illness policies, there are no specific limits on the amount of benefit that the insured can collect, since benefits are not tied either to specific income or expenses. For long-term care insurance, the insured cannot be reimbursed for more than the actual expenses incurred, no matter how much overlapping coverage he might have. 7.4.3.2 Tax treatment of premiums benefits. Questions frequently heard from applicants in the delivery interview for an insurance purchase are, can I deduct the premiums, and, will the benefits be taxable? Agents should respond carefully to such questions and should focus on items that were discussed during the recommendation process, if the applicant had specific tax requirements that needed to be met. In most instances, unless he is also an accountant or tax specialist, the agent is not an expert in taxation, and providing extensive tax advice takes him outside his area of competence. However, the possible tax treatment of premiums and benefits should be taken into consideration, and discussed with the client, in the formulation and explanation of product recommendations. Caution should be taken in making definitive statements, as the agent may not be aware of all factors relating to the client's situation that could take the tax treatment of premiums and benefits outside the norm. The client should always be referred to his accountant or a tax lawyer for specific tax advice. 7.4.4 Policy feature opportunities. Many accident and sickness policies, disability policies in particular, contain contractual features that provide specific opportunities for the issuing insurance company, and/or the agent, to contact the policyholder face-to-face in order to effect a change in the contract. These changes often require the assistance and advice of the agent, and also provide an opportunity for the agent to review the client's current situation and suggest modifications or additions to current coverage. Among the most frequent opportunities to review coverage are those linked with Black Small Square Future Purchase Option, FPO, Rider. Black Small Square Conversion Options. Black Small Square Timing Factors for Ratings and Exclusions. Future Purchase Option, FPO, Rider. As seen in Chapter 2, an FPO affords the policyholder of a disability plan the right to acquire additional coverage with little or no medical underwriting, but subject to financial underwriting to establish that the additional coverage is warranted under the insurer's rules. The options to increase coverage arise periodically, at pre-established dates. Each option is limited to a specified amount, but that does not preclude opening a discussion with the client if additional coverage is now required, or affordable, with medical underwriting. Example: 2 years ago, Consuela purchased $2,500 a month of disability insurance coverage. The coverage was based on her income of $90,000 a year. At the time, she could have qualified for up to $4,500 a month of benefits, but some extraordinary personal expenses limited the funds that she had available for insurance. The policy she purchased has a future purchase option for up to $500 a month of additional coverage, without medical underwriting, provided she qualifies financially for the additional coverage. The first option to increase coverage comes up later this month. Consuela met with her agent and confirmed that she would like the extra coverage. In fact, her cash flow would permit her to afford $4,000 a month of insurance benefit now. Consequently, she agreed to exercise the $500 option and to apply for an additional $1,000 of coverage with full underwriting. Conversion options. Many group disability insurance plans offer a covered group member the option to convert the group coverage into an individual policy upon ceasing participation in the group plan. The conversion option must be exercised within 31 days of leaving the plan, and the acquisition of the new policy can be effected without the insured having to prove medical evidence of insurability. Timing factors for ratings and exclusions. Many ratings and exclusions are permanent, for the life of the policy. But others may be subject to review. This is especially true if the policy limitation is due to a medical condition that may be resolved over time or a hazardous activity. If the medical condition has been resolved to the satisfaction of the insurance company or the insured no longer is engaging in the hazardous occupation or activity, he may apply to have the rating amended or removed. An agent would normally meet with the insured to review his situation and assist him to fill out the requisite form, again offering an opportunity to review the coverage as a whole. If a rating is reduced or removed, the insured's premium will also be reduced, possibly freeing up funds to allow for the purchase of additional coverage, if warranted. 7.5 Policy Claims. The claims process is as important to the policyholder as the application process, if not more so. The timing and content of the claim by the insured will be critical to its success. Needless delay in filing the claim could impact available evidence and the credibility of the claim. And the client should be careful that the information they enter on the claim form is complete, accurate, and wholly truthful. If not, careless or incorrect statements could come back to haunt him in the adjudication process with the insurer. If the agent intervenes in the insurance claims process, helping the claimant to complete the claims form, for example, he has to be careful not to put himself in the position of a conflict of interest, as a representative of both the insurer and the insured. For this reason, some insurance companies require that their agents restrict themselves to delivering blank claim forms to the client and returning the completed ones to the insurance company. On the other hand, the client often looks to the agent for assistance in both the application and the claims process, since the client is often an uninformed layperson when it comes to the intricacies of insurance. In any event, the completion of a claims form is a sensitive legal matter and the agent should be careful to follow the carrier's guidelines if he is involved in the process. 7.5.1 Requirements for a claim. There are several basic steps that are critical to the claims process in most instances. Black small square The insured must first notify the insurance company, or its representative, the agent, of the event, injury, illness, diagnosis, etc. Black small square The insurance company then provides the insured with the appropriate claim forms, either by mail or delivered by the agent. Black small square The insured must complete the claim form, include any supplemental information, receipts, etc., and forward them to the insurance company. Black small square The insurance company may seek further information, either through an interview with the insured, physician statements, tests, or additional physical exams. Black small square The insurance company finally adjudicates the claim and either pays it, in full or in part, or denies benefits entirely. Each insurer has its own requirements for how soon after an event triggering a claim the notification to the insurer must be filed. Most require a claim form be filed within 30 days, but never more than 6 months in any event. To be safe, if contacted by the client, or when discussing the issue of claims at time of policy delivery, the agent should advise the client to notify the insurance company as soon as possible if he expects to file a claim. 7.5.1.1 Receipts. If benefits being applied for require reimbursement for medical or other services already rendered, such as dental work, chiropractic care, prescription drugs, etc., the insurance company will want original copies of receipts for the expenditures, in order to verify both the amount and appropriateness of the claim. These receipts should be forwarded by the claimant to the insurance company along with the appropriate claims form. 7.5.1.2 Medical proof of diagnosis or treatment. All types of accident and sickness contracts require the occurrence of some medical event prior to the payment of benefits. For example, black small square disability policies require an inability to work and earn an income due to injury or illness. Black small square critical illness policies require that the life insured suffer a covered condition or medical event, heart attack, stroke, etc., triggering a claim. Black small square long-term care policies pay benefits based on covered expenses for an insured unable to fulfill at least 2 of the activities of daily living, ADLs. Black small square business overhead expense contracts require an inability to work and contribute to the business productivity on the part of the life insured, due to injury or illness. Black small square extended health policies may require an assessment of medical treatment, such as extensive restorative or cosmetic dental procedures, before expenditures are authorized for reimbursement. The insurer will not, of course, simply take the insured's word for the fact that he is suffering a disability, etc. It is going to want supporting medical evidence for the diagnosis. This will, at a minimum, require a report from the attending physician regarding the nature, degree, and prognosis for the event that triggered the claim. In some cases, the insurer may also request additional tests or a physical examination by a physician of their choice to verify the condition. In addition, particularly in the case of disability, the insurance company may also want ongoing proof of treatment to rectify the situation. This again would require reports from the physician or other practitioner, chiropractor, physiotherapist, etc., treating the claimant. 7.5.1.3 Review factors that reduce benefits. It may be that, at time of claim, the client receives benefits less than the maximum provided for under the contract, or no benefits at all. It is important that the agent assist the client to understand any such discrepancies. Possible reasons for a modification of benefits payable would include situations related to standard contract limitations seen in previous chapters, such as suicide, alcohol or drug abuse, criminal activity, etc. Similarly, all contracts provide that benefits are not payable if it is determined that the applicant made a material misrepresentation at time of application. Accident and Sickness Insurance Chapter 7, Insurance Recommendation, Contract, and Service Needs 185. Furthermore, in cases where financial underwriting is required to determine the amount of benefits payable, reduced benefits may result from a change in the insured's financial situation. For example, disability benefits could be reduced if the insured's income at time of claim is less than was reported at the time of application. 7.6 Client Service. A successful long-term relationship between the client, the agent, and the insurance company relies on service. It is seldom that only one company, or one agent alone can provide the product solution that the client needs. There is plenty of competition in the marketplace with excellent products. What makes the difference is service, the speed and efficiency with which the insurance company responds to the client's needs at every step of the relationship, from application to claim. And the agent is at the forefront of that service relationship every step of the way. 7.6.1 Agent Service Role. An insurance agent's first role is to recommend solutions to meet clients' needs. An agent also has a role in servicing a client once a policy is in force. The agent's service role includes black small square providing claim forms and other relevant documents, black small square being prompt and accurate, black small square developing a strategy for ongoing awareness of client situation and needs, black small square determining suitability of recommendation and or the need for change, black small square documenting services provided, black small square staying in touch with the client on an annual or semi-annual basis. 7.6.1.1 Providing claim forms and other relevant documents. There are a number of instances where the client will need to interact with the insurance company over the life of a policy, for example, black small square to elect an option available under the contract, like a future purchase option, black small square to change or add a beneficiary to the contract, black small square to advise the insurer of a personal change of address, black small square to file a claim. The agent can have a role to play by providing the client with the insurer's prescribed form for performing any of these functions and, except perhaps in the case of a claim form, assisting the client with the completion of the form and forwarding the completed documents to the insurer. 7.6.1.2 Importance of promptness and accuracy. In providing client service, at any point in the agent/client relationship, promptness and accuracy on the part of the agent may be crucial to ensuring that the client receives full benefit from his relationship with the insurance company. If an agent contacts or is contacted by an existing client or a prospect in need of insurance coverage, it is important that the agent meet with the individual as soon as possible to start the application process. Delay could result in the applicant incurring what could have been a covered event or condition before the insurance is in place, nullifying the opportunity for protection. Once a policy is issued, it is critical that it be delivered and explained to the new policyholder as soon as possible, both to ensure that the coverage issued is in fact the coverage that the client needs/wants and to limit the possibility that the insured's health may have changed between the time of application and time of policy delivery. And something as simple as a beneficiary change should be processed promptly, to guard against the risk that a claim could occur in the interval between the client's contact with the agent and the completion of the necessary paperwork. It goes without saying that the agent is responsible for ensuring that forms completed by the insured are complete and accurate and the information that the agent conveys to the insurer is equally accurate. Failure in either regard could result in the agent being at risk financially if a claim goes awry for want of complete, accurate, and timely information being provided to the insurance company. 7.6.1.3 Strategy for ongoing awareness of client situation and needs. The agent cannot wait for the client to come to him with updated service needs. Part of the responsibility of the agent is to ensure that the client's coverage meets his current and changing needs and to evaluate the suitability of potential recommendations to adjust coverage. This requires that the agent be in regular, annually or semi-annually, contact with the client, by mail or email, and schedule regular review appointments, ideally at least once a year. The agent should also stress the need for the client to contact the agent if there is any material change in his circumstances. Example: Agent Singh stresses with his disability insurance clients that they must contact him immediately if there is a significant change in their employment status, change of income level, up or down, change of employer, change of duties, or should they become unemployed. In review meetings, the agent will review the appropriateness of the recommendations that were put in place previously. Are they still suitable? Are any changes to current coverage or plans needed, etc. 7.6.1.4 Documenting services provided. As with the recommendation process, discussed above, it is critical that the agent document every step of the service process, for his own protection and the protection of the insurance company. If the client contacted the agent seeking some level of service, a beneficiary change, for example, the agent should document the date of the contact and what was discussed, when he met with the client, what was said and what action was taken, and when and how the matter was resolved. Similar detail should be recorded if the agent initiated the contact. And particular care should be taken to set out the specifics of any instance where the client expressed concerns about the product sold or service provided by either the agent or the insurance company. Copies of all written communications between the client, the agent, and the insurance company should be retained in the agent's file, including the application, forms filed, waivers signed, and letters or emails passing between all or any of the parties in regard to the client's situation. All of these records could be vital in ensuring that the client is properly served and in establishing a record in the event there should be a claim or legal dispute in the future. 7.7 How insurers react in a pandemic. During a pandemic, a number of factors enter into play. Because every insurer has its own contractual definitions, the insured should contact their insurance advisor if they are unsure of anything and need clarification. The following situations provide a rough idea of possible definitions that may apply in a pandemic. Quarantine or curfew. Quarantining or complying with a curfew, with or without pandemic-related symptoms, and suffering a loss of income as a result, is not sufficient to claim group or individual disability insurance. Quarantining or complying with a curfew is not an illness, even if it results in a loss of income. The insured may seek compensation under government programs, provided he or she meets the applicable qualification criteria. Group and individual disability insurance. If an insured with COVID-19 has medical complications, an attending physician must demonstrate that the insured is unable to work. The insured may be covered by the provisions of his or her disability insurance contract in the same manner as another covered disability. If an insured contracts COVID-19 but does not have medical complications, the insurer will not cover the insured. However, compensation might be available under government programs. Business overhead expense insurance. An insured covered by business overhead expense insurance who stops working temporarily due to complications of COVID-19 must, in order to make a claim, demonstrate by means of a statement from the attending physician that he or she is unable to work for medical reasons. If such a statement is not provided, or if the insured stops working as a preventive measure owing to symptoms of COVID-19, the insurer will not cover the insured. Moreover, if the insured ceases his or her activities altogether owing to symptoms of COVID-19 or a general lockdown, where there are no other medically disabling causes, he or she will not be able to file a claim with the insurer. In such an event, the insured could seek compensation under government programs, provided he or she meets the applicable qualification criteria. Critical illness insurance. Any critical illness insurance claim resulting from complications of COVID-19 must satisfy the existing contractual definitions of the illnesses covered. There is no definition called COVID-19. In certain critical illness insurance contracts, there is a loss of autonomy clause based on each particular insurer's definition of what constitutes a loss of autonomy. This should not be confused with the loss of autonomy in daily activities in long-term care contracts. Long-term care contracts are a different type of contract with a different definition of loss of autonomy. To date, pandemic is not defined in most critical illness contracts. Pre-existing conditions. For existing insurance contracts, there are no changes in the definitions of disclosed pre-existing conditions such as a grandfathering clause. However, the insurer will consider the additional claims experience related to COVID-19 when underwriting new contracts. For example, lung and asthma-related conditions and overwork are currently considered in the underwriting process. In particular, a determination has to be made as to whether COVID-19 produced an effect on these conditions, whether or not that they are pre-existing, and whether those conditions prolong the disability claim period. Vaccines. In individual or group disability insurance contracts, the claim must satisfy the contractual clauses. For example, if an insured, with or without COVID-19, gets vaccinated as a preventive measure and if, following the vaccination, he or she suffers a stroke resulting in an inability to work, he or she will be covered under the contract based on the disability following the stroke and not based on the vaccine or COVID-19. Underwriting. During pandemics like the COVID-19 crisis, insurers see a rise in the number of instances where information is omitted by insureds from insurance application forms. While its omission usually has no impact on the underwriting of the disability insurance contract because the missing information is often obtained when the underwriter consults the insured's medical record, the extra care that underwriters must take when examining each file slows down the contract issuance process. In the future, however, underwriting may be affected if COVID-related claim statistics are unfavorable. Long-term care insurance. The long-term care contract does not have a loss of activities of daily living clause related to COVID-19. To be covered, the loss of daily activities must stem from an inability to work or a physical disability included in the clauses of the contract. If it is disclosed following complications of COVID-19, the insured will be covered. Going forward, insurers may provide more specific clarifications in their contracts regarding claims following complications of a pandemic. Travel insurance. The definitions included in travel insurance contracts vary considerably from insurer to insurer. Generally, medical emergencies are covered, whether or not they result from a complication of COVID-19. In a pandemic, an insurer may modify its clauses and adjust its premiums accordingly. It is important not to confuse emergency measures with preventive measures, such as a requirement to quarantine upon returning from a trip or arriving in the host country, even though certain travel insurance contracts cover the expenses resulting from such measures. Also, an insurer may require that the insured purchase both travel insurance and drug insurance in the event of complications related to COVID-19. Death. Every type of death is covered, provided it satisfies the clauses and exceptions in the contract. In a disability insurance contract, the accidental death clause, for example, must be consistent with the definition of an accidental death and not the definition of a death following an illness or complication related to COVID-19. In the latter case, the insured will not be covered. Chapter 8, Group Plan Specifics. Competency components. Black small square assess the client's needs and situation. Black small square analyze the available products that meet the client's needs. Black small square implement a recommendation adapted to the client's needs and situation. Black small square provide client service during the validity period of the coverage. Competency subcomponents. Black small square determine the client's situation. Black small square assess the appropriateness of the client's existing coverage in regards to his situation. Black small square analyze the types of contracts that meet the client's needs. Black small square consider the impact of underwriting criteria as they apply to the client's situation. Black small square propose a recommendation adapted to the client's needs and situation. Black small square validate the appropriateness of contract amendment, renewal, and termination applications in regards to the client's situation. Black small square inform the claimant of the claims process. Accident and sickness insurance. Chapter 8, Group Plan Specifics. 191.